micro and macro trends for cryptocurrencies.
There is a slight change of a lineup here, but at least Shiraz couldn't make it because of the travels conflict and Alina as well. But I'm actually very happy that I have a fantastic company today on stage. So why don't we start with a quick round of introductions? Tyler, Giovanni, can you please introduce yourselves and what has been your way in the crypto space?
Well, that's always a fun story, yeah. I've been in and out of crypto for about 10 years, but I recently doubled down and actually started working full-time into it about 4 years ago. I have done a lot of different work across DAOs and various types of startups, but right now I'm focused mostly on carbon credits for the blockchain, which is Coral, and bringing fashion IP on chain with CrowdMuse.
Okay, thanks. First of all, Olga, thanks very much for organizing this panel. It's a pleasure to be with you here. My journey with crypto started about in 2017, 2018. I was already in Malta working in a more traditional financial environment. And then Malta became the first jurisdiction that starts to open to the framework for blockchain for crypto. I started to get very much an interest on that. I was very fortunate to start to talk to a few of the people that were responsible of the initial paper that led to Satoshi Nakamoto famous document. And since then, it's been an ongoing journey. And at the moment, I'm the CEO of Gate Malta, which is the regulated entity of Gate.io, one of the biggest exchange in the world that is coming to this field to taking advantage of the regulation and to cater for new segment of clients.
Fantastic, thank you. So, well, we've been long enough in that space, right, to see all the price fluctuations and the increasing of a market cap. So 37,000 Bitcoin, almost 1.5 trillion in market cap. What are your thoughts on recent, price jumps?
Well, maybe I'll start this one and then I'll let Taylor continue. I think that is a positive news. I don't think that we are out of the woods yet, but I think there are some early indications that we can take out of that. First of all, if you look at the historical data, looks like that the price give an indication that we are at the end of the negative cycle and we start to recover. And then behind this recovery, I think there are like two or three major factors from how I can see things. The first is about the in mass adoption of institutional investors. We saw that one coming during the last few months. More and more institutional investors sees crypto as an asset, as something where they can diversify their portfolio. I've been seeing more and more banks that were working more on a little bit more on the fiat side, taking more of this asset. In the last few days, we know there were exchanges like in United States that record the mass number in terms of future tradings or other options. And this, again, is a very, very good signal because where United States is trending, others are following. And then there are some other, let's say, micro trends like we can see that after the bubble of the 2017-18 of all these altcoins coming in place, that market starts to be a little bit more stabilized. There are like 2 or 3 altcoins that are taking advantage on everybody else because they simplify the way the fees are much lower and is a better utilization for the
Can you name these altcoins?
Yes, Solana is one of those. Polygon is one that is very interesting from my point of view, and I think they are leading the way, but there are others behind this too.
All infrastructure projects though, right?
Yes, very much.
Tyler?
Yeah, I might also add Optimism and Arbitrum to that list because they are also catching some good attention. But in terms of the price, like I remember looking at the price when it was $650 many years ago and thinking,
did you buy your pizza?
Well, I was like, how can anyone like pay this much for one Bitcoin? This is a bubble. Why would someone want to pay for it? Gold is more valuable, right? It's never going to be worth more than gold. But one important thing to remember about crypto is that price is a leading indicator, right? So the price moves very, very quickly because you're dealing with inelastic supply curves, which basically means that when there's not a lot of supply on the market. So when there's a lot of buyers, it shoots up really quickly. And when there's a lot of sellers, it comes down very quickly. And for a lot of people, that's the main narrative that they see, when in fact, it's actually, the use cases that are driving the future of it. So it's very important what Giovanni said here is that now as the institutions are recognizing it as an alternative investment class, they're seeing the opportunity to put money into it. And the numbers don't lie. Like most of the volume that we've seen over the past few weeks has come from the Chicago Mercantile Exchange, which means that it's actually institutions, it's not retail. So, they're seeing the opportunity here, and it's the actual decoupling from the stock market has happened because, about 6 months or a year ago, we were talking about how it's trading exactly like the NASDAQ. And now we're starting to see that change where crypto is behaving on its own way while the rest of the stock market is doing its own business, which means that we're starting to see it be recognized as another form of investment.
I would like to get your opinion, maybe really quickly, because we will have the next panel fully focused on crypto regulations and on MiCA specifically. So anything you have to say in regards to trends for regulators? I know it's been a rough year for crypto, right? And we've seen backlash from SEC, we've seen new MiCA introductions, which is probably a good thing, more than a bad thing. So what are the trends for regulators? How do they demonstrate their attitude towards crypto these days? And what's going to happen in your opinion?
Maybe I'll start to take that one because I'm pretty much involved on that. This is going to be very important. And again, I do not want to emphasize too much on the regulatory side because other panels will come later on. No point to dig deeper into MiCA.
We'll give them a heads up.
Yes. We'll start to prepare the ground for them to warm up the audience. But the thing again in terms of they are creating an environment that is more and more safe for new entrants to come. Like there is still a vast mass of potential users that are still teetering at the edge, not coming because they want to wait for a little bit more. Again, regulation in place, clear rules. They want to understand that, the downside that we saw in 2022 during the last year are not there. And they are helping. And they are helping in a second way. And this is very important. And I'm seeing that one firsthand because they are harmonizing the market. What we don't want to have a different jurisdiction, everyone just doing or taking an approach with crypto in their own different way. Crypto is an asset that is traded worldwide. And what we need the regulators to talk to them and to harmonize the environment. Hence, everyone can continue to trade and continue to deal with the crypto in the best possible way.
Is it happening now? Are regulators harmonizing the environment?
Let me frank, not as yet. Not as yet.
Exactly.
No point in cheating here. But let's say we see that there is a path in front of us, and I think that we are heading toward the right direction. It's not going to be, Olga, as straight as we can imagine. A few bumps. But I believe that this market is very much used to volatility and is coming on that side as well.
True. Tyler,
Yeah.
Any specific jurisdictions maybe you would advise people to look into? Hong Kong, Dubai, Malta?
Well, I mean, in terms of regulatory clarity, obviously Europe is leading the charge, which is why you see a lot of startups in America leaving the country because they, like Coinbase, for example, they try to actually maintain an open dialogue with the SEC, and then they don't get any response, right? And they even get bait and switch type of hostile responses. So that type of behavior actually scares a lot of the innovation out of that jurisdiction. And Europe is trying to make clarity on regulation. Singapore has pretty good regulation in terms of what tokens are and how tokens can be sold. And then Dubai is also doing quite well with how they regulate assets. And it's a very important thing to understand what use case you're going into with crypto, right? Because, for example, with Coral, we're working with carbon credits on the blockchain, but we're not actually a financial services company. So we're not custodying assets on behalf of our customers. So we have less to be concerned about than someone who's actually holding assets. Because if you're holding assets, you're a financial services company, and then you have to have chief compliance officers and follow a lot of different types of rules and regulations. But regardless, what Mika is going to do to us is it's going to require, it's still a permissionless environment where people can go and buy and sell as they wish, but it's going to require an extra layer of identification. So it's permissionless, but I know who you are, right? And in order to operate in those markets, especially if you want to enter into, more enterprise type of software solutions, you're going to have to comply with KYC and AML and make sure that it is all clear who's doing what and where and when. Because, to be honest, that's what we need in order to make sure that we have better clarity. And then, that's more of the enterprise side, but then this will also affect how retail, for example, tokens and coins are sold. And it will bring more trust to market participants that there will be less chance of rugs or, people just running away with the money. So, yeah.
So I like that you actually mentioned actual use cases. So tokenization, but that's one of actually my favorite topics. And we're going to talk about that later this day, about asset tokenization. We've seen all types of ICOs, IDOs, IEOs out there. Then again, acting like maybe some sort of a bubble, because let's say if you launch a project, sometimes you don't need a token, or just tokenize assets for the sake of tokenizing still doesn't make any sense. Okay, back to my point. Your favorite use cases for crypto, and which new use cases you think may drive mass adoption in the next coming years. Let's say not even, I don't know, I know that, we cannot plan very far away in the future these days, but still, maybe in the next 2-3 years.
Yes, I think that as far as I can see, there is a clear case. And again, let's take for the moment for the side NFTs, this a little bit more trendy and more, catching topics. I think that the field of remittance might be the icebreaker. And I'm saying that actually in my background, when I go back about 15 years ago, a little bit more than that, I was working remittances myself. And I can see that this is one of the fields where you really want to enter when you want to make mass adoption, because what the mass of the people need to do, they need to pass coins, they need to pass money around, and this is the first things that you want to do on that regard. And in this way, you just start to reach from the bottom, because you include percentage of the population that were left out of the financial instrument. I'm thinking about countries from Latin America, from Asia, from Africa. And again, I was part of that in the past, because I was part of the digitalization of the remittance at the time. So people were able to receive the remittance on their phone. But now with the crypto, you only need an internet connection, and you have that one pretty much everywhere. As soon as this channel will start to be open, the adoption will come from the bottom and will move up to the top, and this will help to spread really literally across the globe. So I can see, if I have to pick up one case, this is the one that for me is the most important.
The most exciting, Tyler?
Yes.
Yeah, I really agree that remittance is the major use case. It is the fundamental core of the Bitcoin white paper, is a peer-to-peer value of exchange, right? But one thing also to keep in mind with mass adoption is what exactly is the segment that you're talking about with mass adoption. So some people think like, oh, my grandmother's never going to use a MetaMask wallet. And that's true, because that's not the type of user experience that we want to encourage. The type of adoption means people are using the blockchain without even recognizing that they are using it, just like we use the internet without recognizing that we're using, DNS records, for example, right? So one thing to be aware of, though, is when adoption comes, it can be disrupted as well. So like OpenAI has just disrupted a whole bunch of AI startups, right? Central bank digital currencies are going to disrupt a lot of remittance applications if they can ever coordinate between each other, right? That's always a very long and complex political argument to try and get nations to coordinate on that level. So for the meantime, remittance is the main use case because it solves a lot of problems. And you see people coming from nations that had no familiarity with crypto, all of a sudden getting crypto addresses and wallets because it's faster, cheaper, and more efficient to get money in and out of their pockets that way. Other types of adoption that I see are gaming is a big one, but gaming has to be something that's play to enjoy, not play to earn, because play to earn is basically, it's a paradox. We don't play games to make money, right? It's a mixture of extrinsic and intrinsic motivations. We play games because we enjoy them. So there has to be some kind of crypto application layer that helps games to be enabled by crypto, but it's not just, Ponzi-nomic financial use cases. Can't be hyper-financialized. And then the other major thing that I would say is tokenization of real-world assets. So there's two ways of looking at this. One is consumer crypto, which is, for example, phygital fashion, where you can take intellectual property, put it on the blockchain, and then have multiple, basically you have revenue sharing. So when people use this intellectual property, the original owner of that will get money streamed back to them for that. And then the other one is, like we've seen a lot of it emerging, especially in Dubai, it's quite trendy, where you see tokenization of real estate, tokenization of carbon credits, tokenization of bonds, taking all of these things onto the blockchain. Just again, it enables increased liquidity and better settlement.
That's a good example. So we've seen NFT spring, we've seen DeFi boom, ICO boom was, I think, ages ago now, it seems, right? So regulated exchanges will be a never-ending trend. This is true. So what
Very
would
much hope so. We're here for that.
Well, we need something tangible to put money into, right? And regulated exchanges people trust.
exactly, depending on where you're coming from. I won't touch any political sensitive subjects. So what about trends for exchanges on another level? Where are decentralized exchanges going? Where are centralized exchanges? We already talked about that. It all depends on relationship or situationship with regulators. What about the decentralized world? The DeFi.
Yeah, DeFi is a fun rabbit hole to go down. And I see DeFi basically being split into two with regulation coming in, where the DeFi as we know it will continue to exist and it will continue to have large volumes of capital, but it will mostly be the same type of retail players that we have seen that led the DeFi boom back in the summer of, what was it, 21? Or no, it was 20. But the second layer of DeFi that will emerge will be the Miko one, which is, like I said earlier, where there will be a level, still a permissionless layer where people can come in, buy and sell as they please, but then there will be a level of KYC and AML on top of that. So then it will be obvious who is doing what and what time. And that's what's going to encourage the institutions to come through, because the institutions, there are DeFi protocols with the Lindy effect, like Curve, for example. They've been around for a very long time, and people see that it's weathered the storm and it hasn't been exploited. But still, there needs to be something beyond that, right? So that's also where we're starting to see cases like insurance emerge, where there's an extra layer of protection for people who come from a traditional finance background and need that added layer of security in order to operate in this world.
Yes, I think that this is one of the directions. Tyler just pointed one very much out correctly. Some additional security is going to be needed. Definitely there is lots of space to be playing in DeFi, but there is something that still needs to come. It's not there as yet, but we are going to get to that level.
Okay, we have 1 minute left. Your favorite blockchain protocols, to name it, and where do you see the level of crypto adoption? Let's say we can make up a scenario, what's going to happen in 10 or 20 years' time. Your grandmother is using MetaMask. Or regulated exchanges are set up in every country and are 100% interoperable, so you can actually send money from country to country without any borders. So what's the perfect scenario for crypto adoption in your opinion, plus your favorite blockchain protocols?
So, well, I don't think my grandmother will ever use MetaMask, but there will be account abstraction, right? So it'll be like on the retail side, you'll see sign in with Google, where basically, or a single sign in type of option where you just don't even know you're using a wallet. You don't even know you're interacting with the blockchain. So that's my major thesis here is it's got to be
built-in Web3 wallets.
Yeah, it's got to be a blockchain invisible experience, right? So you're interacting with these things and they're doing the mechanisms underneath, but you don't actually understand, you don't need to understand or custody private keys, right? So then that will scale. And I think probably the one that will be most widespread will be consumer crypto use cases. So businesses that are enabled through blockchain activations, but then the people who are at the end of it will be not even aware that they are on the blockchain. So basically, coming back to fashion, a person can purchase a t-shirt and they don't even know that their revenue is automatically being shared between the supplier, the brand, and the fashion designer with smart contracts, right? And then, yeah, protocol, it's a really tough choice. But what I like about Polygon is the way that they are, pushing actively on the narrative of, the consumer case, the sustainability. Just they have a very good public relations image that helps people to understand how crypto can be used for good. And I'm very bullish on any kind of crypto protocol or platform that is trying to communicate blockchain for good and sustainable use cases.
Thank you.
Just very quickly, let's set up a time frame about 5-10 years. I think that Tiller just made...
No, 10-20.
Let's see, the bet is on.
Okay.
But Tiller just made a very good point. I think that very soon we are going to get to the level where people are using blockchain. In fact, they are already using now without realizing that. And the experience is
without making an effort.
Correct. Because again, you just need internet and a few very basic tools to do that. And in terms of protocol, again, Polygon, we mentioned that one at the beginning, and Solana, I think that in 2024 is going to be the main challenge for Ethereum because it brings more simplicity, less fees, more utility to the case. So let's keep an eye on those one.
Not a financial advice. Thank you, everyone. Thanks a lot. It was a fantastic first panel of the day. Please give my panelists a big round of applause.
Thank you, Olga.
Thank you.
Yeah, thank you very much.